Good afternoon. Market news now. Asian stocks were mixed following days of turbulent trading this week as investors continue to monitor the situation surrounding the Omicron COVID variant. Chinese tech stocks in Hong Kong plunged after ride-hailing giant Didi announced that it will begin taking steps to delist from the New York Stock Exchange less than 6 months after it made its debut stateside. The company also said in a statement that it will pursue a listing in Hong Kong. Meanwhile, shares of Tencent in Hong Kong fell 2.3%, while Alibaba dropped 2.6%, the Hang Seng Tech Index declining 1.5%. Looking at what's happening in Europe, markets on that side are slightly higher. As we look at things, stateside stock futures muted in early pre-trade as investors await the November jobs report, which is expected to show solid jobs growth last month. A Dow Jones poll projected 581,000 jobs were added in November, so we'll definitely be keeping an eye on that. But to talk to us about the overall themes and developments in the market, we are joined by Warwick Lucas, who's from Galileo Securities. Warwick, thank you so much for your time. I mean, it's a rare day where you have an event like this particular event that we're waiting for, the non-farm payrolls report, which is generally key data that we'd at least talk about for at least a few more days. But now we're kind of balancing that news item with what's happening around Omicron, which is grabbing the attention of market analysts like yourself. When we talk about the NFP that we are expecting in a few hours, what is the market expectation?
Well, Natasha, I think quite clearly the expectation is that it's pretty strong. You mentioned 580,000 there. Other numbers that I've heard mentioned were in the order of at least 550. And I mean, generally, the kind of data that we're seeing from the US is pretty firm. I mean, job growth momentum is strong, layoffs are low, initial jobless claims are low. So, if anything, what we might see with the kind of data that is expected to be strong is, if anything, a talk about tapering may be tempered by the whole discussion around COVID and the Omicron variant. So, I think there's quite a lot of moving parts at the moment.
On that note, what has, when you look at our JSE markets, how's that performing given the picture that you've just described?
Well, I think under the circumstances, the JSE has been relatively strong and perhaps doubly interesting in the wake of a firmer rand. Normally it's a weaker rand that propels the JSE more strongly. But if anything, I think when you're talking a firmer rand and a firm JSE, that's kind of a confidence indicator. Obviously, it's early days. I think markets will be looking for clarity around Omicron and developments there. But I think the reality is that more and more our different societies are becoming used to COVID, used to the stresses that COVID places on businesses and consumers, and better able to adapt as various news flow materializes.
Right. So locally on our markets, we had Old Mutual making a 3.7 billion rand proposal for Long for Life. I mean, when you look at Long for Life since its listing, what has been the main issue with this particular share, especially when you look at the discount at which it trades?
I think it really highlighted that there was a terrible ceiling upon virtually all South African listed small caps. I mean, Long for Life was run by an extremely capable and well-regarded executive, and yet there was almost no recognition for what the company and the listing offered. I mean, as you point out, it offered a discount. It offered a capable executive. It offered a reasonable level of integrity in terms of accounting and financials to the market and so on. And yet it got next to no recognition. So what we're seeing, I guess, is the tail end of that. If the market wasn't going to recognize it, well, then somebody with a big checkbook ultimately was going to and take it right off the market. And it's a film that we've seen played over and over again in recent times. And yeah, I mean, there's still bargains to be had on the JSE.
Let's take things stateside for a bit, or at least international. Saudi Arabia and its allies in the OPEC Plus alliance agreeing to continue increasing monthly crude production. However, they did say they are willing to reconvene due to the Omicron variant. What has been the impact on Brent crude?
Well, I think that OPEC are playing a bit of a mealy-mouthed game here. I mean, they've obviously seen that governments are prepared to release strategic stock in the short term, and I think perhaps that release of stock was kind of a signal to OPEC to play the game. But I think there's also a long game here, and that is that OPEC would obviously be concerned and cautious of the potential risk of new capacity coming on line from fracking markets such as particularly the US, which is, I mean, it's capacity that can come on in fairly short notice, but obviously needs to be sure that there's some decent prices available to come on. And one of the best ways of fending that off is obviously to make sure that they sell their product at prices and at amounts that put a lid on that oil price. So that, I suspect, is at the back of the minds there.
Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Securities.